Hello, ladies and gentlemen. Top of the morning to you from this part of the world, and depending on whichever time zone you're tuning in from, good afternoon and good evening to you. As always, I'm very excited to welcome you all to the first edition of the Forex Morning Mastery for this week, your daily dose of financial insights and trading strategies. Happy Monday to you all. It's the first trading day of the week, and it's another important day for us to review the current market structure with the utmost intent of preparing ourselves for the new week. So I do hope we all had a wonderful weekend out there, and for me it was splendid, very short and exciting. So my own name is Sheriff Daramola, and for the next 30-40 minutes thereabout, I'm going to be your host, as I will be taking you on a trading journey where we shall be evaluating the financial market, leveraging our basic tools such as the trend lines, key levels, and of course chart patterns to unravel the potential trajectory for price action for this week. And in fact, in preparation for this week, I have done a comprehensive analysis on all of the assets we will be looking at for this week. And in fact, I do have very insightful and simple trading setups that we will be using to guide our trading decisions. So I do encourage us all to stay tuned in, exercise patience, grab your favorite beverages so that you do not miss out on the valuable ideas we will be deliberating on today. So for this week, we are going to be looking at about 3 financial instruments on our watch list, which includes the USOILSPOT, the GBPUSD. I'm going to be revisiting the GBPUSD, and the reason why I will be reintroducing the GBPUSD is due to the fact that the last couple of weeks I've seen, is it weeks? I think the last month we've seen a choppy market condition on the USD JPY, which further reflects the uncertainty in that market due to the Bank of Japan's intervention, which no one knows right now when that will happen. So this has caused a lot of consolidation phase, and for me, I think that environment isn't healthy enough for us to make daily trading decisions. So I had to step that down for a while, maybe a week or two. Let's allow that market to make a decision before we come back into the market. So I have replaced the USD JPY with the GBP USD, and finally my favorite asset amongst them all, the XAUUSD, is going to be on our watch list for this week. And during the course of the weekend, I did not share any publication on the GBPUSD and the USOILSPOT. So that simply means that I will be doing a top-down analysis on these assets today. So this is a rare opportunity where you will be able to see in real time how we were able to come into the decisions we make on the 1 hour time frame, which happens to be our execution time frame. So I was able to share the XAUUSD during the weekend. I do hope you guys saw that video, because it's important for you to have a background knowledge of how we will be planning for this week. So I'm so excited to welcome you all to another promising edition. Now, for those of you who are joining us for the first time, you are highly welcome on board, and I'm very excited to have you around with us. And to simply guide you on what we really do here, well, the Forex Morning Mastery was born out of a necessity to do real-time follow-ups on the assets we are monitoring for the week. So during the weekend, I usually share videos for revealing my plans for the new week. So we come here as technical traders, gather here on Mondays, Wednesdays, and Friday, coming together as a community and engage in follow-ups and reviews of our current trading positions in preparation of both the London and the New York session. And my aim here is to equip you with the knowledge and skills necessary to make informed trading decisions independently. Trust me, the more time you spend with us in this community, the better you get to comprehend our analytical approach, which eventually allows you to be able to make or enhance your own trading decisions and strategies. So once again, I do welcome you on board and encourage you to actively engage in the comment section. So I see you there. Big Ben, good morning to you. Glad to have you around with us this morning. Trust you had a great weekend out there. So with that being said, here we shall be diving right into the business. And as usual, our daily routine is to keep tabs with the fundamental factors that are likely going to be influencing the sentiment in the market for today and for the later part of the week. Now, based on the asset we are going to be monitoring for this week, we shall be focusing on economic features from both the United States and the United Kingdom economic docket. Now, usually we focus on high impactful event, and we are not going to be seeing any high impactful event until Wednesday, April 10th. So in that regard, I had to include some mid-tier economic features so that we can have a broader view into what market participants will be looking forward to guide their trading decisions. So for today, Monday, April 8th, we have two events that we will be looking forward to, which is coming much more later in the day, and that is about 15 hours to 16 hours thereabout till when this event will be happening. So the first one here is coming in from the United States economic docket, and that is it's a speech, of course, from Kashkari, who is the District Federal Reserve Chief Executive Officer for Minneapolis, and he was once a voting member of the Federal Open Market Committee, that is the FOMC. And of course, whatever he's saying today, based on his credibility, will be holding a lot of weight, and major key players in the market will be looking forward to what he will be saying, as it will be giving us an insight into the Fed's monetary policy outlook, economic situations, and of course monetary policy decisions that are likely going to be happening. So majority will be tuning in to analyze his rhetorics, to have an insight into what is going to be happening. Remember, we are within an uncertain phase in the U.S. economy right now, where there is a dichotomy between whether or not the Federal Reserve is going to be cutting interest rate or maintaining interest rate higher for an extended period of time. And about a couple of weeks ago, we had how the Fed chairman did emphasize that there is going to be a 3 rate cut for this year, that is 75 basis point, 25 basis point, 25 basis point, 3 times for this year. And of course, he went on to emphasize that this is going to be based on the economic data. So they need to see signs that truly inflation is thinning out in the economy before we starts reducing interest rate. However, in the last couple of months, the CPI data, the inflation data, has been high, even beyond market expectation, hereby casting a shadow of doubt over the idea of any interest rate cut. Then last week we saw 2 weeks ago we saw the core PCI, which is of course an inflationary data, coming in higher than expected. And last week Friday we saw how the NFP came in beyond market expectations. So the US economy is showing a lot of resilience in the last couple of months, which further cast a shadow of doubt over the idea of any interest rate cut anytime soon. So this of course has really affected the US dollar in the last couple of weeks, dropping to the downside due to the uncertainty regarding this. So the market participant will be looking forward to the CPI data later in the week to have an idea of what is going to be happening. And before then, we want to be hearing what Fed officials will be saying as regards to that, as it will be giving us an insight into what the market will be doing next. Then later on today, we are going to be looking at the BRC like-for-like retail sales data, which is coming in from the United Kingdom. It's also going to be coming in about 16 hours from now. So we do want to be marking that timing on our calendar so that we can be around to see what structures is evolving before the event happens. Now, this is an event that shows the performance of the retail sector in the United Kingdom. And of course, when the data comes in higher than expected, it is seen as a positive implication to the economy, which obviously could transition into positive bullish momentum in favor of the pound sterling. And when the data comes in low, then of course it will be seen as negative. Now, if we look at the previous data for the month of February, it came in at 1% expansion, as you will see here, though we do not have any projection yet, but we want to be looking forward to what the actual data is going to be like. Will it be just as expected, below expectations, or even beyond expectations? So we will be looking at the GBPUSD chart today to see how the market participant will be anticipating this event. Then another thing I would like to buttress during this review of the economic calendar is the consumer price index, the CPI data, which is coming in on Wednesday. That is in 2 days time. This is one of the major highlights for this week, and of course I have a strong belief that the anticipation of this event on Wednesday is going to be influencing the way market participants will be behaving today and tomorrow. So while we review the current market structure, we are going to be taking all of this into consideration. So as usual, we shall be sniffing into the current market dynamics, looking out for structures and patterns that we are going to be using to guide our trading decisions for today. So stay tuned in so you don't miss out on the ideas we will be talking about today. So the first asset we are going to be looking at today, as usual, is going to be the USOILSPOT. And remember, last week we had a tremendously profitable week on the USOILSPOT. Remember, throughout the course of last week, we have been buying this asset and we kept on adding more positions to maximize the potential of that bullish move. And of course, we had various factors behind the scenes, which obviously has affected the price of oil, from the geopolitical tensions in the Middle East, the Ukraine drone attacks on Russian refineries, the Middle East, the attack, Israel-Gaza conflict, and of course, we also saw the attack on the Iran's embassy in Syria, which of course escalated concerns as regards to oil disruption from that particular area. And of course, there is the Houthis in the Red Sea, which have been attacking oil vessels, making vessels to travel a longer route to their destination, hereby causing much more in cost production. So all of these factors, and with the OPEC Plus members deciding to extend their production cut into the next quarter, all of this has escalated concerns as regards to demand for oil, which has sent price of oil testing a new high for this year around the $87-88 level. So as a result of this, we did capitalize on that uptrend move. Now, going into the new week, what is going to be our plans? What are we going to be looking at to guide our trading decisions? Well, for me, lately, yesterday, we learned about the Israeli's troop withdrawing from southern Gaza and peace talks with Hamas reducing concerns about conflict escalation, and this of course has affected oil prices, and as a result of this latest development, we've been seeing some profit-taking activities going on in the market, resulting in a bearish gap at the beginning of this week. So we are going to be looking at this chart today, and to do this we will be scaling up into the higher time frame so that we can have an holistic perspective into what is really going on in this market. So right here on the 4 hours time frame, which is where our first contact is going to be, what I did here was to take into consideration the character of price action in the last couple of weeks. And if you do this appropriately, you will see that the market has been very bullish. As you will see, market has consistently found higher highs and higher lows, resulting into an ascending channel you will see on your screen right now. And if we connect the series of higher lows, we have the support line of that ascending channel, and when we connected the series of higher highs, we have the resistant line of the ascending channel. Now this further buttresses the fact that buyers have very strong in this particular market, and as long as price remains within this ascending channel, we shall be looking out for patterns and structures that supports the idea of buying the asset. Now, in addition to the ascending trend line, a couple of levels which we shall be using to guide our trading decision. The first one here is the highest level for this year, which is the $87 per barrel, as you will see right here, marking a significant resistant line for the current structure. And the most important level here is the key level situated at the $85.75 area, which is going to be serving as a yardstick that will be guiding our trading decisions for this week. And we know how we use our key levels in this community. As long as price action remains above the key level, we want to be looking out for patterns and structures that support the idea of buying, and we are not going to be selling unless price breaks down, retests the key level. Now, with the key level at the $85.75 area, sharing a beautiful confluence with the support line of that ascending channel, you will see that during the course of the weekend we saw institutional traders leaning towards selling the USOILSPOT, resulting into the breakdown of both the ascending trend line, that is the support line of the ascending channel, and the key level to incite a bearish idea for this week. Now for me, I want to consider this bearish gap that we saw during the weekend a signal of profit-taking activity. As you all know, whenever market participants who had capitalized on that uptrend may at some point want to be taking some profits, especially as we as the CPI data gradually approaches. Now, in this situation, is this breakdown going to be a true breakdown or a false breakdown? Now, to guide our decisions on this one, we shall be scaling down into our execution time frame, where we do want to see and understand the character of market participants following the breakdown of this structure. Now, scaling down into the 1 hour time frame, you will see that since the week began, price action was initially confined within this range between the $85.35 level and the $84.50 area to give us a range bound structure, which further emphasized the indecision, the prevailing uncertainty in the market at this point. Now, will price drop further to the downside, or will price continue the momentum to the upside? Well, the structure here is going to be guiding our decisions. How you know, whenever we identify this kind of flat channel, we exercise patience, waiting for either the breakout of the resistance line to give us an opportunity to buy, or the breakdown of the support line to give us an opportunity to sell. Now, if you look at the structure closely, though we have the support line of this range at the $84.15 level, now there's something that caught my attention this morning while reviewing this current structure, and that is the hammer candle that rejected the support line here, which for me is a signal that buyers are still present in this market. Now, as a result of this, I had to position myself right above the resistance line of that range to capitalize on an uptrend move. So let's see how the market is going to play out here. Above the $85.35 level is looking promising for us to buy the US All Spot today, and of course look out for more opportunities to buy at the breakout of the $85.75 level. And if price continues to climb and find new highs, we have the $87 area where we shall be adding more buy positions to our existing trade. So I encourage us all to mark out these levels, as we will be using them to guide our uptrend continuation structure around these market dynamics. However, in as much as we're looking out for more opportunities to buy here, we cannot ignore the potentials that sellers can also come in at any point in time. Of course, we've seen the institutional trading for the weekend, which is leaning towards profit taking, as we saw here. Now, what are the conditions that will make us feel comfortable selling the US All Spot today? Well, if I am going to be selling the US All Spot, I would rather want to see price action break down the support line at the $84.15 level before I can start considering selling. However, we may see an opportunity to join a sell before the breakdown of that support line happens, as you will see that we have this trend line, sort of a thing right here, which has been supporting the current uptrend continuation, which started this week, as you will see here. So if it so happens that this trend line is broken and retested today, then continued selling pressure below the structures will be a good signal to join early enough. Then with a sell stop order below the $84.15 level, we have the privilege of maximizing the potential of this bearish move. So this is the simple setup we are going to be using to guide our trading decisions, at least for the first half of this week. And trust me, I will be with you in the comment section of both my TradingView and Telegram platforms to give us updates as at when due. So this is my simple view on this asset for today. So I encourage us all to mark out these levels accordingly, as we shall be using them to guide our trading decisions for today. If you have any questions whatsoever, feel free to let me know in the comment section. So as always, I will be taking the next 10-15 seconds off to see if there are any questions, while you can also use that time to mark out these levels on your chart, as you will be needing them as a reference point to guide your independent trading decisions for today. All right, guys, in the absence of no questions, I want to assume that we are all on the same page, and in that regard, we shall be moving on to the next asset on our watch list. And please do not forget to click on that like button if you have found this content helpful and useful in making your independent trading decisions for today. Kindly give the video a thumbs up, and thank you very much as you do so. So with that being said, let's move on to the next asset. So the next asset we are going to be looking at this morning is going to be the GBPUSD, which I just newly introduced for this week due to the uncertainty from the USD JPY market structure, which obviously I want us to allow that market to settle down and let them make a decision before we can revisit that asset one more time. So as a result of this, we shall be looking at the GBP USD for this week. Now, since I did not share a public video on the GBP USD, so I will be taking you through the higher time frame, doing a top-down analysis on this asset, and let's see what things are looking like from an holistic perspective before making an informed decision. So my analysis on the GBP USD, I think, started on the is it on the daily time frame? Yes, the daily time frame was where I started my analysis on the GBP USD for this week. Now, if you look at the structure, what I did here was to take into consideration the character of price action since last year November. That's about 5 to 6 months of historical data to understand what is really going on in this market. And if you do this appropriately, you will see that that area between the 1.255 and the 1.246 area has served as a formidable and robust demand zone in this market. And as you will see, every attempt by the sellers to break through the structure in the last 5 to 6 months has been met with strong resistance from the buyers, as you will see here. And during the course of last week, despite the strong bearish momentum prior to last week's trading session, we saw that the sellers were unable to even break down that area, further emphasizing how strong the buyers are around this area. So for me, I was able to identify this area as a demand zone that we will be using to guide our trading decisions for this week. And of course, when price action remains above the demand zone, we will have no business selling this asset unless something significant on the chart comes up. Now, in addition to that demand zone is the descending trend line, which obviously has been supporting the bearish momentum since the beginning of this year. So after connecting the series of lower highs, we have this beautiful descending trend line. And you will see here that a couple of months ago, price action did breach and break out of that descending trend line to signal an uptrend move. Remember, we took advantage of this opportunity during the month of February/March, and then from a technical standpoint and theoretical perspective, it is always likely that price may come back to retest the structure that was broken with an attempt to continue the uptrend move. Now, as you will see, the last couple of weeks I've seen a situation where price action has been testing that descending trend line, further emphasizing the idea that buyers may likely be taking over the market. Now, if you look at the structure here, let me zoom in so we can see things clearly. So if we look at this bearish impulsive leg that came into testing that descending trend line, if you look at this appropriately, you will see that we'll begin to see the formation of a reversal pattern, maybe in the form of an inverse head and shoulder pattern, where we have the right shoulder right here, and then my key level for this week at the psychological level had the 1.26500 area serving as a potential neckline for that reversal pattern. So to validate this reversal pattern, we will need price action to break out of the 1.265. Remember, this is our key level for this week, and you know how we use our key levels in this community. As long as price remains above the key level, we want to be buying the asset. So to buy the GBPUSD, I would rather want to see price take out that neckline and the key level at the 1.265 to validate that reversal pattern and of course join that uptrend move. Now let's look at the 4 hours time frame. I think we have something simple enough to follow through on the 4 hours time frame. So scaling down into the 4 hours time frame, you will see here that we have a couple of descending trend line. The first one has been broken, and in the last 48 hours or so, this is the first one here. It has been broken, as you will see here. Okay, and we saw price break out, comes back to retest it. Will it continue the uptrend? That's a question we want to be answering this week. Will the momentum continue, or are we going to see a situation where price will break down below the descending trend line and then continue the downtrend move? Now, to have a clearer perspective into what is going on now, we will scale down into our execution time frame, that is the 1 hour time frame, to see how market participants have been behaving with this market dynamic since the beginning of this new week. Now on the 1 hour time frame, we begin to see things much more clearer. As you will see, let me zoom in so we can see things clearly. The new week has started with a range bound structure. As you will see, price action in the last 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 hours, price action has been confined within the 1.26380 level and the 1.26150 level to emphasize the prevailing uncertainty in the market at this point in time. Now you know how we use our range bound structure. Whenever we identify them, we will have to exercise patience, waiting for market participants to make a decision on where they are likely going, and we shall wait for either the breakdown of the support line of that range to give us an opportunity to sell, or the breakout of the resistant line of that range to give us an opportunity to buy. And as it is right now, I think that it appears that the pound sterling's recent bound has seen a stall at this point, with the GBPUSD exhibiting caution in anticipation of Wednesday's US CPI inflation data before making any fresh move. Now, despite the reduced tension in the Middle East, a negative turn in risk sentiment is weighing on the pound sterling at this point, which may likely put the path of least resistance for pounds to the downside. And on the other side of the pond, we know across board that the US dollar has been facing uncertainty leading up to the CPI data due to the interest rate decision, which no one knows what is going to be happening there, and this has obviously affected the value of the dollar. So at this point in time, for the GBPUSD today, we shall be using this new structure on the chart to guide our decisions. So we're looking at a breakdown of the support line of that range for selling opportunity, and of course the breakout of the resistant line of that range for buying opportunities. And if price continues to climb, the breakout of the key level at the 1.265, which is the neckline of the reversal pattern we identified on the higher time frame, will give us more opportunities to maximize the potential of this bullish move. Trust me, I will be with you in the comment section of both my TradingView and Telegram platforms to give you updates as at when due. So this is my simple perspective on the GBPUSD for today. So I encourage us all to mark out these levels, as we shall be using them as a reference point to guide our independent trading decisions for today. If you have any questions whatsoever, or you need some further clarifications, feel free to let me know in the comment section. So as always, I will be taking the next 10-15 seconds off to see if there are any questions before we move on to the final asset on our watch list for today. Stay tuned in, guys, and do not forget, click on that like button, please. We have over 7 people on board. Let's make the likes tally with the number of people on board, and thank you very much as you do so. So see you soon, guys. Hello, Sahad. Good morning to you. Trust you are doing very well. Glad to have you around with us this morning, Sahad. All right. For those who would click on the like button, thank you very much for doing so. For those who are yet to click on it, please, this is the cheapest way you can support this community to grow. And thank you very much as you do so. So, in the absence of no questions, I want to assume that we are all on the same page here. So in that regard, we shall be moving on to the final asset on our watch list for this week. So the final asset on our watch list for this week is my favorite asset amongst them all, and that is the XAUUSD, popularly known as the gold spot. And what a phenomenal week we had during the previous week, as we were able to scoop in over 1,000 pips buying this asset. Remember, we sold at the beginning of the week, but we caught the bullish momentum and we rode that momentum all the way into the $2,330 area, having multiple buy entries along the line to maximize our profit on this asset. And for those of us who are part of this profitable journey and of course stayed faithful with the analytical approach, well done and kudos to you for being part of this profitable journey. So as we head into the new week, we have some interesting setup evolving on the chart right now, and in fact we've seen the week started on a strong bullish note as we saw a potential of the uptrend continuation in gold prices. As you will see now, price action just tested another new high at the $2,354 zone before that retracement move happened. Now on the XAUUSD, I wouldn't be doing a top-down analysis here because I already shared a video in my during the course of the weekend where I did a top-down analysis on this asset. So we're just going right into the details on the 1 hour time frame to see how we are going to be managing our trades. And if in any way you missed out on my weekend video on the XAUUSD, you can check the link right in the description box below to keep yourself up to date with the current market dynamics. So the week has started on a very strong bullish note right above the key level we identified during the weekend video. So during my weekend video, we had the key level at the $2,300 area, as you will see here. And of course, we saw price break out of that key level last week trading session. And one thing which I said in my weekend video on the XAUUSD is that we may likely see the potential of a retracement move, that is profit-taking activity, happen before the uptrend continuation comes in. And of course, this was exactly what happened this morning. We saw for the first couple of hours, price action dropped due to some profit-taking activity, and then we saw this strong impulsive move to hit a new all-time high record at the $2,354 area. Now the question that should be coming at the back of our mind now is, what is the reason why this price keeps continuing to the upside? Now, this morning, in the last 12 hours, there is the news that the Bank of China, the Chinese economy, has been buying the gold at this point, and I think this is one of the reasons why we see the momentum happen this morning. Now the question is, will this momentum continue to the upside? Remember, we are in an uncharted territory. We don't have any path to gauge how market participants will react to the structure, and due to the fact that we are within an all-time high zone, there is this psychological expectation that price action may take some time before it acclimatizes to the zone. As those who had bought the XAUU, the gold commodity, those who have been enjoying the momentum up to this point, out of fear, may want to start taking some profit ahead of the CPI data, at least to be on the safer side, just in case price action crash in this area. Now, this kind of mentality result into choppy market conditions, consolidation phases, retracement moves around this area. Now, besides this, the positive risk sentiment fueled by reduced geopolitical tensions in the Middle East may limit the upside potential of safe haven assets such as the gold. Additionally, the upbeat US non-farm payroll that came in last week, more than expected, suggest a possible delay in federal rate cuts, because now the economy of the United States is very, very resilient and strong, and I don't think economically it makes any sense that the Federal Reserve will cut interest rate at this point in time. However, we still look forward to see what the CPI data will say on Wednesday to further have a concrete decision on what to do next. But at this point in time, the US Treasury bond is doing very, very well, and you know how directly proportional the value of the US Treasury bond yield is to the US dollar. So if the US Treasury bond yield is doing very well, it is likely for the US dollar to do very well as well, and if it drops, the dollar too will drop. So with this little fundamentals behind the scenes, I still think that we should not ignore the potentials that sellers could come in favor of the US dollar. So at this point, I think that market participants or major key players may want to step aside, so we may see an extended sideways trading activity ahead of the CPI data before some decisions is made. So considering these factors, how do we position ourselves for the next move? How do we intend to manage our trading ideas on this asset? So what I did this morning was to mark out a trend line after connecting the series of higher lows here, and as you will see, we have an ascending trend line to work with. And you know how we use our ascending trend lines in this community. As long as price action remains above the ascending trend line, we shall continue to look out for patterns and structures that support the idea of buying, and the only condition that will make us sell is for this ascending trend line to be broken and retested. But at this point, price is still floating above the ascending trend line, hereby supporting a bullish idea for us today. Now, in addition to the trend line is the fact that we have a range bound structure. As you will see, price action has been confined within the $2,348 level and our key level at the 2,300 area. So we need to see how the market is going to be reacting to the structure. Will it break out of the resistance line to give us an opportunity to buy, or will it break down the support line of that range to give us an opportunity to sell? So for me, the fact is price is still trading above the ascending trend line, so I do have a buy stop order just right above the $2,348 level to join an uptrend move if ever price action breaks out of that structure. And of course, I have a sell stop order below the 2,304 level, which is the support line of that range, to join a bearish move. However, we may see price break down this ascending trend line. If price breaks down the ascending trend line, you can see how beautifully it shares a confluence with the previous high at the $2,330 area. If I see a retest of structure with continued selling pressure, giving me signs that buyers are finding it difficult to climb back above that ascending trend line, I will be willing to join a bearish move there and then add more sell positions at the breakdown of the $2,304 area. So this is what we shall be doing here to guide our trading decisions for today. So let's see how the market will play out, as our center of focus for today's trading session is basically between the $2,348 and the $2,304 area, where depending on the direction of the breakout will give us an idea of where price action will be going today. I think I'm justified with the simple setup here today, but if you have any questions whatsoever, feel free to drop them in the comment section, and I will be taking the next 10-15 seconds off to see if there are any questions before we round off on today's activity. And do not forget to click on that like button. Your likes are very valuable to me, and in fact it also helps the algorithm promote the video to a wider audience of traders who may find the content beneficial. And thank you very much for those who had clicked on the like button. I really appreciate from the bottom of my heart. And for those who are yet to like, please do. This is the cheapest way you can support this channel to grow, and thank you very much as you do so. I will take the next 10-15 seconds off while you use that time to mark out these levels, and I wait to see if there are any questions before we go ahead and round off on today Forex Morning Mastery. Then that reminds me, the XAUUSD live window will continue today. 5 to 10 minutes into the New York session, we shall start the XAUUSD live window. And for those of us who do not know, the XAUUSD live window is a platform where we monitor real-time price action on the XAUUSD during the New York session. So it lasts about 5 to 7 hours depending on the market's activity for that particular day. So at the end of the session, you will see the link to that platform. Click on that link, click on the notify me button so you can get notified as soon as we come on live. So let's see if there are any questions before we start rounding off for today's Forex Morning Mastery. Stay tuned in. You guys are very wonderful. I really appreciate it. I'm just seeing we have 11 likes on board. Thank you very much. I really do appreciate the support from you guys. Thank you very much. I see your comment here. What's his name again? Sahad Chakio. I hope I'm pronouncing your name correctly. Please pardon me if I didn't. So you're asking here that, are you familiar with the COT index, that is commitment of traders? If so, can you give us more insight about it? Well, the commitment of traders, yes, there is the COT report. I'm aware of this. I usually followed this report about 4 or 5 years ago when I was still new in trading, and in fact it is a weekly publication by the Commodity Future Trading Commissions, that is the CFTC. And this report usually shows positions of different market participants in the future market, and it is categorized into commercial traders, non-commercial traders, and non-reportable commercial traders, that is small traders like retail traders like you and I. Now, while the COT gives us an insight into the positioning of traders and market participants in general, for me, it is not directly relevant to our analytical approach in terms of price action based technical analysis, because this data here reflects past data and past positions. In fact, there is a lag phase there, about a week or 2 weeks lag. So it's a future market. If you know what a future market is, it's like a projection of what is likely going to happen in the future. So based on this idea, market participants, investors, hedge funds likes position themselves for this. So it is more like a lag. It has a lag phase for me, and it doesn't really give me an insight into real-time trading opportunities. So because of this, I had to stop monitoring the COT report. Well, I think the COT is good for future traders, those who trade commodities like sorghum, groundnut oil, oil commodity, gold, and the likes. This is very, very good for them too. It's good for future traders generally. I don't think it has any relevance to price action trading analysis, which obviously is a real-time approach in understanding how market participants are thinking in real time with spot price on the chart. So that is my view on it anyways. It's so I hope I was able to answer your question. This is my own view on what the COT report does. So please let me know if I did answer your question very well, or you need some further clarifications. Let me know and I will be willing to be of help in that regard. I see your comment, Hayo Akobi. Good morning to you, Hayo. How are you doing today? And you said, I have a $100 account on center account. What lot size is advisable if I want to risk only 2% of the account size? Oh my God. How will I answer that? Well, first of all, let me state here that I'm not an advocate of small accounts like this. Though I'm not saying that I am condemning it at all. I'm not. I'm just trying to let you know what my opinions are. Now, I usually prefer to do at least a minimum of $1,000 account, and there are various factors why I do this. First, risk management, position sizing, then buffers for drawdown too as well. Now, if you are having a larger account portfolio, you will be privileged to take any positions you see or any trading setups you see on the charts, because you will be ready to take them due to the fact that you can afford to take trades of 100 pips stop loss, a trade of 150 pips stop loss, and still maintain your minimum risk in percentage on your portfolio, let's say 1%, 2% of your account size. So this is one benefit I think bigger account size bring. However, if you are trading a smaller account, you will be choosy with your trades. There are some trading opportunities you will see on the chart that will come in with 100 pips stop loss. There are trades like that, especially on higher time frames, and there are trades will come with 100 pips stop loss as well. For someone who is using an $100 account, you might not be able to take such trades, so you need to be very, very choosy in the trades you take. So you will be open to trades with like 20 pips stop loss, 30 pips stop loss, 40 pips stop loss, and which are very rare in the market. It's not giving enough breathing space for price action to move around. Now, you asking me about $100, you want to be risking 2% of your account size on your a center account, I will suggest that you use a position size calculator to do that. I think there are position size calculators for center accounts. Please try to Google them. I don't have any idea right now, but I can do a research for you and see how that works. You can chat me personally via the correspondence right in the description box or the one scrolling at the bottom of your screen, and we can talk about that one-on-one. So I hope I helped you on that one. Sahad, I see your comment. You are very much welcome. Glad that information was useful. So, in the absence of no further questions, I guess we have come to the end of today's Forex Morning Mastery session. And in fact, it has been a wonderful moment with you guys. I really love the energy this morning. Thank you very much for the support. 11 likes, that is wonderful. Thank you very much. So let's see how the week is going to play out. We were able to take on about the 3 financial instruments on our watch list for this week, which includes the USOILSPOT, the GBPUSD, and the XAUUSD, which is my favorite asset amongst them all. And we were able to identify simple trading setups using our basic tools such as trend lines, key levels, and chart patterns to unravel the potential trajectory for price action in the days to come. And always remember, I told you that we may likely see some extended sideways trading activities as market participants anticipate the CPI data from the United States on Wednesday. So we need to take this into consideration. So when price moves well in your favor, kindly ensure that you move your stop losses to secure your position, because the possibility of price snapping back into the entry point is very high during this period of time. So please take note of that one. And also remember that every decision we make in the financial market is more or less an educated guess until price action hits your TP target. So in that regard, we do want to be having a well-defined risk management strategy in place to protect our portfolio. And so far today, we were able to identify levels and structures to guide our decisions. I do hope you marked out these levels accordingly. Please do. If you have done so, well done to you. So all we need to do is exercise patience and allow these structures to mature. And for those of you who are joining us for the first time, I'm very excited to have you around with us this morning. I do hope you are able to gain 1 or 2 things from what we discussed here today. And if you did, you want to be part of our subsequent editions, trust me, the more time you spend with us in this community, the better you get to understand our analytical approach, which eventually will help you in making independent decisions on your own. So I look forward to seeing more of you, same time on Wednesday, 9:05 a.m. West African time, 8:05 a.m. UTC, as we come here again to review how well these assets have been doing, and of course prepare ourselves for Wednesday's London and New York session. That day promises to be an exciting one. As we all know, we're looking forward to the CPI data, which obviously is going to be bringing in some volatility in the market, and of course we do want to be on standby to capitalize on that move. So I look forward to seeing you all on that same day. And it's on this note I want to wish us all the best of luck today. Trade smart, trade consciously, and do have a wonderful evening, everyone. Bye bye.